Hello visionaries, welcome back to the Investing Visionary, your go-to channel for breaking down financial concepts into simple, actionable advice. Today we're covering the basics of three fundamental investment types: stocks, bonds, and ETFs. Whether you're new to investing or just looking to refresh your knowledge, this video will give you the foundation you need to start building your portfolio. But before we dive in, a quick disclaimer: I'm not a financial advisor. This video is for entertainment and educational purposes only, so always do your own research or consult with a professional before making any investment decisions. Let's start with stocks. When you purchase a stock, you're buying a piece of ownership in a company. Each stock represents a share in that company's equity, meaning you're entitled to a portion of the profits, usually paid out as dividends, and you have a claim on its assets. Stocks are traded on exchanges like the New York Stock Exchange or NASDAQ, where prices fluctuate based on supply and demand, company performance, and broader market conditions. Stocks are a popular investment choice because they offer the potential for high returns. However, they also come with higher risk compared to other types of investments, as stock prices can be volatile. There are two main types of stocks: common stocks and preferred stocks. Common stocks give shareholders voting rights at shareholder meetings and the potential for dividends, while preferred stocks typically offer fixed dividends and have priority over common stocks in the event of a company liquidation. Investing in stocks can be a great way to grow your wealth over time, but it's important to do your research and understand the risks involved. Next, let's talk about bonds. Bonds are essentially loans that you give to a corporation, government, or municipality. When you purchase a bond, you're lending money to the issuer in exchange for regular interest payments over a set period. At the end of that period, known as the maturity date, you receive the face value of the bond back. There are several types of bonds, including government bonds, corporate bonds, and municipal bonds. Government bonds, like U.S. Treasury bonds, are considered very safe because they are backed by the government. Corporate bonds issued by companies typically offer higher interest rates, but come with more risk depending on the company's financial health. Municipal bonds are issued by local governments and often come with tax benefits. Bonds are generally considered safer than stocks, making them an attractive option for conservative investors or those looking to preserve capital. However, the trade-off is that bonds usually offer lower returns compared to stocks. Finally, let's explore ETFs, or exchange-traded funds. An ETF is a type of investment fund that holds a collection of assets, such as stocks, bonds, or other securities. ETFs are traded on stock exchanges just like individual stocks, which means you can buy and sell them throughout the trading day. The primary advantage of ETFs is that they offer instant diversification. For example, if you buy an ETF that tracks the S&P 500, you're investing in 500 of the largest companies in the US with just one purchase. This diversification helps spread risk, as you're not relying on the performance of a single stock or bond. ETFs can also focus on specific sectors, like technology or healthcare, or track other asset classes like bonds or commodities. ETFs often have lower fees compared to mutual funds and are a popular choice for both beginner and experienced investors looking to build a diversified portfolio with ease. So, to recap, stocks offer potential for high returns, but come with greater risk. Bonds provide stability and regular income, making them a safer but typically lower-yielding investment. ETFs offer a balanced approach by providing diversification with the simplicity of a single investment. Understanding these basics is the first step towards building a strong investment portfolio. Whether you're aiming for growth with stocks, preserving capital with bonds, or balancing risk with ETFs, each of these investments has a place in a well-rounded strategy. If you found this video helpful, please give it a thumbs up and subscribe to the Investing Visionary for more tips and strategies on how to make the most of your money. And as always, if you have any questions or suggestions for future topics, drop them in the comments below. Thanks for watching, and happy investing.